Hello everyone, good morning and welcome to today's lecture. So today what we are going to do is we are going to continue chapter 10. Okay, before we continue chapter 10, I just want to provide a quick recap of what we have discussed till now in chapter 10 so that we can be on the same page. Okay, so what we discussed in chapter 10, we discussed about SRE, how a review engagement is different from your audit. Okay, what is a review engagement? We discussed in detail what is a review engagement. Okay, limited assurance engagement, review procedures, where we have a limited assurance compared to the reasonable assurance. Okay, then we understood, okay, there are two standards which covers your reasonable review engagements, limited assurance engagements, that is SRE 2400 and SRE 2410. SRE 2400 is kind of engagement to review historical financial informations, okay, which covers all reviews, kind of umbrella standard kind of sorry. SRE 2410 is kind of review of interim financial informations performed by the independent auditor. Okay, so SRE 2410 is a specific one which is performed by the independent auditor. But when I talk about SRE 2400, it is performed by not the auditor, but a practitioner. Okay, and it's an umbrella standard for all the review engagements. Okay, so that was a basic of SRE, that how the bifurcation of SRE is done. Yes, I have received a doubt from Rohit. I'll just take in a minute, Rohit, your doubt. I have received it, but I'll take in a minute. Okay. So yes, so then what we discussed in SRE 2400. Now, the way we have auditing standards, the way we have requirement of auditing standards, on the similar line, we have SRE and its requirement. The only difference we saw was that in auditing standards, we have a separate, different auditing standards. But in SRE, what we had is that the same logic, the same concept of auditing standards being combined under one SRE applicable to the limited review engagement, limited assurance engagement. For example, when I talk about SRE only deals with inquiry and analytical procedures. Okay, we saw that the review engagement deals with inquiry and analytical procedures. Now, again, when I talk about the type of assurance that we are giving, it's a negative assurance that nothing has came to our attention that could lead us to believe that financial statement have not been prepared. I'm really sorry. Financial statement have not been prepared in accordance with applicable financial reporting framework. Okay, then then it's kind of a negative assurance you could see over here. Okay, unlike in audit, we used to say they are free from material misstatement due to fraud or error. Here we say in audit that they are prepared in all material respect. If you see the compliance framework, the wordings of audit, it says that they are prepared in all material respect. Okay, but in limited review review engagements, we say that nothing has came to our attention, which could lead us to believe that they are not prepared, kind of a negative assurance. Okay. Then we went and understood the detailed requirement one by one of SRE 2400. That is, with respect to the SQC1, okay, what is the quality control requirement embedded already into the SRE? SQC1 is applicable to all engagements. But there is already some, requirements which are embedded into SRE. Then what are these requirements? So we understood those requirements. Okay. For example, we understood the scenarios where the practitioner should not accept the review engagement, and that is when the objective and scope, the purpose, or the rationale is not appropriate. The review engagement is not appropriate in the circumstances. Means, let's say, for example, it was required audit, but we are performing a review engagement. Not appropriate. Then ethical requirements cannot be fulfilled. Information required to perform review engagement might not be available. Practitioners has doubt upon the integrity of management. There could be a limitation on the scope of practitioners' work, which could result either disclaiming an opinion or issue an adverse opinion. Okay, so these are the areas where sorry, bear with me, I have a bad throat. Yeah, so these are certain areas where practitioner has to look for, and they has to accept the review engagement if these conditions are not, or she should not accept the review engagement if these conditions are not fulfilled. So in other words, we can say these are the preconditions. Preconditions means, first, acceptability of financial reporting framework. Second, agreement of management and acknowledgement of understanding their responsibility, providing access to all the informations. Okay, so in this way, you can say, these are the preconditions of the review engagement. Then we came that, practitioners' responsibility is not to issue an audit opinion. So in review, it's not an audit. So the practitioner will not issue an audit opinion on the financial statement. And why? Reason, because we will see in the report also that this is not an audit opinion and limited review. Okay, review engagement, and we will perform only inquiry and analytical procedures. So that's why we need to mention everywhere. Okay, we have not performed an audit. We have not performed in detailed audit procedures. We have performed only procedures which are related to the review engagements. As a result, this is not an audit opinion. The same is required to be agreed in your engagement letter. The same is required to be agreed in your, you will mention in your audit report. Sorry, limited review report. Okay. Same way we have SA 210 agreeing the terms. On the similar line, we have requirements in the SRE also for agreeing the terms. We have a requirement of materiality. Materiality based on the judgment, not based on the materiality level, some benchmark. So here the materiality will, work in a different way. Remember in the previous session, we discussed in detail about the materiality, how judgmental materiality could be applied. Then again, SA 315, obtaining the understanding about the entity, designing and performing audit procedures, okay, inquiry and analytical procedures. Okay. Now, my procedures will be addressed, designed in a way to address all material items in the financial statement, including disclosures, to focus on addressing areas in the financial statement where material misstatement can occur based on my previous knowledge, based on my previous identifications, based on my understanding that I have received from the entity till now. We discussed in detail about the inquiry, what areas where we would perform an inquiry. Then we discussed in detail about the analytical procedures. Okay, we discussed about the related party, The same way we have SA 550. We discuss about the fraud and non-compliance of laws and regulations. SA 240, SA 250. We discussed about going concern, limited application of SA 570. We discussed about using work performed by other practitioners with respect to the review engagement, similar on the lines of SA 620. We also discussed about additional procedures when practitioners become aware that the financial statement may be materially misstated, kind of SA 450 on the line, similar lines. Okay. Then we discussed about the subsequent events, SA 560 on the similar lines of SA 560, written representations, SA 580, and what are the key areas where we need to take the written representations. Okay. Evaluating the evidence, again SA 450 on the line of SA 450, we discussed that one. So we have discussed these all areas till now with respect to SRE 2400 and how they are embedded into that SRE for a limited for the review engagement. Means how the normal auditing concepts are modified and incorporated within the SRE for the limited review purpose. Okay, so that is till now we have discussed. Any doubt as of now till this point? Mansha, can you just specify like SEBI circular regarding which particular area so I can just answer that. Okay, so there is one doubt from Rohit with respect to the study material. Okay. So I'll like to show you guys something. Just a minute. So the doubt is that the new study material for the auditing does not come with the auditing pronouncement. Only comes 3 modules of ISM. This means that the three modules are sufficient for May 24 exam. There is no need to refer auditing pronouncement. Please clarify. So it is not the case. You might not be having a printed study material, okay, with respect to auditing pronouncement. But having said that, I'll just show you something on the BOS portal for your reference purpose. Let me share my screen just a minute. Okay, now you might be seeing this is a BOS portal. Okay, guys, you go to new study material, final, English medium. Okay, you go to paper 3 advanced, you go to module 3, and at the end of module 3, you have an auditing pronouncement. If you click here, it will give you all the auditing pronouncements over here, which are applicable. And if you click on this particular link, let's say we are talking about SRE 2400, it will take you to SRE 2400. This is the auditing pronouncement. So you might not be having in your study material, but the links are given under module 3. Okay, this auditing pronouncement. And from here, you can refer all the pronouncements. So these are required to be referred. It is not the case that you need to only, go to the study material. It will be better if you read auditing pronouncement. The reason is because certain auditing, certain standards are already covered in your intermediate. Okay. Now a question may come upon which is mixed on the standard which are, of intermediate and final. So quite possible. In that scenario, it is expected that you should have knowledge of the standard which are already discussed in the intermediate plus the standards which we are discussing now. Okay, so you can refer this particular document, and from here you can get all the auditing pronouncement. So these are the links for the standards, all these standards in one single PDF. Just click on any of the standard that you want, it will take you to the particular page. I hope I'm clear now with respect to your query, Rohit. Any any further doubts, guys? Any further doubts? No. Okay. If no further doubts, let's proceed. For let's continue the session. Okay. So what we were discussing now is forming an opinion. The opinion part, and trust me, that is pretty much on what we have discussed till now. So when I talk about forming an opinion, okay, again, based on my evaluation of the misstatement, I need to form an opinion. First, I need to understand whether my financial statement adequately refer or describe the applicable financial reporting framework. Overall structure, content of the financial statement is as per the financial reporting framework or not. Okay. While forming my opinion, I need to understand whether, okay, as per my financial reporting framework, whatever I have used in my financial statement, okay, terminologies, disclosures, accounting policies, accounting estimates are as per the requirement or not, as per the financial reporting framework requirement or not. Then the information that is presented in the financial statement, okay, is relevant, reliable, comparable, understandable or not. Then I need to understand whether the disclosures are requiring are such disclosures that they provide the understanding of the material transactions or the events that have happened, okay, and they appropriately convey in the financial statement. So when you are evaluating or when you are forming your conclusion, when I say forming my conclusion means I'm deciding what conclusion I have to give, whether adverse opinion, whether qualified opinion, whether unmodified opinion, okay. In order to decide whether I should give unmodified opinion or not, there are few points that I need to consider. Okay, so these are the points which are specified. That overall presentation, structure, content of the financial statement should be in accordance with applicable financial reporting framework. Number one, whether underlying financial statement, including related notes, appear to present the underlying transactions even in the manner they achieve fair presentation. If that is the case, then yes, I can give unmodified. If that is not the case, then in that case, I need to check, okay, what is the impact, how much it is deviated, and on the basis of that, I can or I need to issue modified opinion, which could be qualified adverse disclaimer. Okay, now see in SA we have a separate standard, SA 700, 705. Okay, dealing with the types of opinions. Okay, but in SRE, okay, we don't have a separate SRE for unmodified or modified opinion. So the requirements that what could be your language, what should be your language, what should be your title of the paragraph, what should be your type of opinions you can issue in a limited review or review engagements, that everything is covered under the SRE, one single bucket of SRE. So unlike your auditing standards where we have a SA700, SA705 in SRE, the requirement of these two are merged under the single bucket of SRE 2400. And what that says that, okay, so when you are issuing an unmodified opinion, okay, unmodified conclusion, that is clear, no issues have been identified, I'm issuing an unmodified conclusion, unmodified, not modified one. Okay, when I am issuing an unmodified conclusion, when I have obtained the required evidence and nothing has came to my attention that could lead us me that could lead us lead me to believe that there is something not appropriate, okay, or the financial statement are not prepared in all material respect in accordance with the financial reporting framework. Now if that is the case, like nothing has came to my attention, then I can issue a unmodified opinion. Having said that, there is a requirement under SRE that when you are issuing an unmodified opinion, you need to have these two paragraphs, any one of these two paragraphs. So, this is the paragraph wording for unmodified, opinion. Okay, this is the paragraph wording for unmodified opinion. You need to select any one of them. So what this wording says is that, see, based on our review, nothing has came to our attention that cause us to believe that the financial statement do not give a true and fair view or do not represent or present fairly in all material respect in accordance with the applicable financial reporting framework. Now, these are for financial statements prepared based on the fair presentation framework. On the other line, when it says a compliance framework, it says that based on our review, nothing has come to our attention that causes to believe that the financial statements are not prepared in all material respect in accordance with the financial reporting framework. So these are, based on your framework, you have to add one of the paragraph in your opinion. Now, if you see, this was a limited review report. Okay, although this is as per SRE 2410, I'm just showing you the opinion paragraph over here. What it says that, based on our review conducted as above, nothing has came to our attention that causes us to believe that the accompanying statement prepared in accordance with the recognition and management principles laid down in the IND-AS and other principles generally accepted in India has not disclosed the information required to be disclosed in terms of Regulation 33 of listing regulations, including in the manner which is required to be disclosed or that contains any material misstatement. Although there is a slight change in the wording, reason because it's a case of SRE 2410. Okay, but you can, you can, correlate on the similar lines because see, this is a mixture of your compliance and fair presentation framework. Okay, so compliance framework is like, Regulation 33, where you need to comply all the requirements and everything is there. And fair presentation framework is a generally accepted accounting principles in India. So on the basis of that, you have a mixture of both over here, and accordingly you have a similar change in the words, but it's on the similar lines that they disclose, or nothing has came to our attention that can let us to believe, and then you read the yellow part and then the blue part. Nothing has came to our attention that causes to believe, okay, that the accompanying statement has not disclosed. So let me change it from here. Yellow one will go till here. Okay. And then you take it from the blue that has not disclosed the information required to be disclosed in terms of listing applicable financial reporting framework, including the manner. Okay, or contains any material misstatement. So, kind of, if you'll see the B1. Okay, so this is how you need to form an opinion, unmodified opinion. Now come to modified opinion. As I told you, we don't have SF 705 applicable over here. If we don't have a SF 705 applicable over here, then how we are going to decide that when to issue a unmodified opinion, when to issue an qualified opinion or adverse opinion or disclaimer of opinion. The requirement that we have understood in SA 705, if essays are not applicable in review engagement, then how we have to we can decide that which opinion to issue. That's why we have a guidelines, we have requirements embedded on a similar lines in SR. Embedded on a similar line in SRE. The SRE says that the practitioner shall modify the conclusion on the financial statement when the procedures, when the practitioner has determined that based on the procedures he has performed, which procedures? Inquiry and analytical procedures, that the evidence I have obtained, okay, that the evidence I have obtained through inquiry and analytical procedures says that the financial statement are materially misstated. Means, let's say for example, I perform the inquiry, I perform analytical procedures. I'll give you a hypothetical example how you can get misstatement through inquiry and analytical procedures. Let's say for example, this is let's say hypothetical example. I'm not saying that is present actually in this particular financial statement, but hypothetical example. Now, when I went and understood with the management, I performed the inquiry. Management tell me, currently you are showing, okay, your material consumed, but your sale has increased. Why? Management said, no, there is no such case, but we believe that it is in the line with the sale. Okay, so I went and I inquired further. Is there any price revision? Okay, so management told me no, there is no price revision. Rather, there was a decrease in the price during the year. So prices were decreased to tackle the inflation and recession in the market, but there is no price increase. So now, based on the inquiry and the analytical comparison that I have performed, I could say that this particular amount, this particular decrease over here, okay, this decrease, okay, is not matching with this increase. Based on analytical procedures, again, hypothetical example, I'm not saying this is a real case, just hypothetical example. Okay, based on my analytical procedures and inquiry, I came to know, no, there is something inappropriate. I need to go and do further details. Now, SRE never restricts you to perform additional procedures. It says that you need to perform additional procedures when you identify something inappropriate or you identify there could be a misstatement. Okay. So, if you are identified, okay, there is something inappropriate, you are identified that, financial statement are materially misstated. In that case, SRE doesn't stop you. Rather, it says that, okay, if you are identified, if practitioner becomes aware of a matter that can cause, practitioner to believe that the financial statement are materially misstated, the practitioner has to design and perform additional procedures to conclude whether the matter is impacting my financial statement as a whole and misstating, causing my financial statement as a misstating as a whole. Okay. And whether the matter is causing my financial statement as a materially misstated. Okay. So I need to determine whether it is impacting or not impacting by performing additional procedures. So once I'll perform additional procedures, okay, I'll inquire with management, I'll understand with the management, I may perform additional procedures. Now, when I talk about additional procedures, they may include, different type of procedures, not only restricted to your inquiry and analytical procedures. No, that is not only restricted to inquiry and analytical procedures. That could go further and beyond your inquiry and analytical procedures. Okay, and in that case, you need to, accordingly, okay, need to, perform your could be. Okay, for example, let's say there is a, uh, area, there is a no provision for doubtful debts. Okay, you have identified while, doing inquiry or analytical procedures, the management forgot to provide for doubtful debts. Now, what you would do? You will ask management to rectify, or you will, you yourself will perform a procedure whether a provision is required or not first to ascertain that. Okay, so you may, understand the case. You may perform additional procedures, including some audit procedures also, but to understand whether a material misstatement is there or not. Once you identify yes, there is a material misstatement, then you will go and ask management to rectify. On the similar lines, when I will identify, okay, the cost of material consumed is not appearing as per the sale of product. Okay, and there is no price revision also. Then I may go and perform additional procedures. And what additional procedures I will do depends upon case to case basis. But just one example I'll tell you. I will go and analyze. Is there any manual adjustment done to cost of material consumed? So basically, in big companies, there are ERP systems which automatically calculate the cost of material consumed based on your sale. Okay. So whenever you place a sale order, accordingly the cost is, automatically pulled into that particular GL, and, automatic entries are there and everything. Automatic systems are there. So that's why I'm saying, it depends upon case to case basis that how the cost of material consumed is being recorded and how many ITGC controls, all the controls, are around there. Let's say one of the area is I'll go and check, is there any material manual journal entry or adjustment passed in the cost of material consumed? And if I identify something, I may, come across some adjustment which are not necessary or which are not which are unexplainable. I may ask management to explain them or to reverse them or something like that. Okay. On the basis of that, I may able to conclude that okay, this is materially misstated because I performed additional procedures by going to the manual adjustment that has been passed. That is an additional procedure that I have performed. I went and checked the manual adjustments. Okay. So when I went and checked the manual adjustment by performing additional procedures, okay, what I did is I am, okay, understanding. I am understanding, okay, whether the financial statement are materially misstated. I'm trying to obtain the evidence based on the procedures I have performed. Okay, or there could be a scenario I'm not able to obtain the evidence. So Either practitioner determines based on the procedure performed that evidence obtained that the financial statement are materially misstated because of the manual adjustment, or the practitioner is unable to obtain sufficient and appropriate audit evidence in relation to one or more items in the financial statement that are material in relation to the whole financial statement. Means I'm not able to get any evidence with respect to cost of material consumed. When I asked management, please provide me the breakup, management doesn't have any breakup. I asked management to share me the reason why there's a decrease when there's an increase in sale of product. They don't have any information available. Again, hypothetical example, not a real example, not a real case. I'm just talking about hypothetical. Okay. Now don't go there and say that this particular financial statement contains material misstatement. No. Uh, sorry, just give me a minute. Okay. So in that case, either I have evidence in my hand, or either I'm not able to obtain the evidence. In both of the scenarios, I will issue a modified conclusion. For example purpose, I'll write it examples over here. Example. I'll just take it some picture from here. I'm sorry. Okay. For the purpose of example, I have, just pasted a financial statement over here, copy that cost of material consumed is misstated due to uh, incorrect incorrect manual adjustments. Okay, passed in that. There is an example for this one. And when I talk about this is for when you have obtained the evidence based on your understanding or additional procedures. And when I say like you are not able to obtain evidence means example like that management was not able to provide the details of, or you can say breakup of, material consumed amount. Also, they were not able to explain the decrease in material consumed compared to, sorry, to the increase in sales. Okay. Similar example. One hand on I'm saying I'm able to obtain the evidence. On another hand, I'm not able to obtain sufficient evidence. If that is the case, when I'm able to obtain the evidence about the material misstatement, if when I'm not able to obtain the evidence, sufficient and appropriate audit evidence, not audit evidence, evidence for review purpose. Okay. So the term I'm using here is sufficient and appropriate evidence over here. Not the audit evidence, but evidence over here. Okay. Sufficient and appropriate evidence. In that case, I need to modify my opinion. But again, if I need to modify, there are some requirements that I need to follow the way it is there in the SA 705. The same way we have here. First, use the heading of qualified conclusion, adverse conclusion, or disclaimer of conclusion as appropriate in the report. Okay. So I need to use that heading. Whether it's a qualified conclusion, adverse conclusion, disclaimer of uh, conclusion. So which conclusion is there? I need to accordingly specify based on the requirement. Let me see if I have a good example for you guys where I could show you this particular one. I have a good example to show you guys on this particular one. Not a specific, I would say, kind of disclaimer for what you say, a modified conclusion, but you can say, similar example near to that, to a modified conclusion. Let me just give me a minute, it's getting open. Don't go on name, please. It's just for your reference purpose. This is a limited review report under SRE 2410, not 2400, but on a similar line just to show you. See over here. Now there are some areas, there are something specified. We refer to note number this for non-provision of interest. We draw attention to note number 6. We conduct our review. This is this. So a statement of subsidiaries. Yeah. Now over here, very important. Based on our review and procedures as stated in paragraph number 5 above, and based on the consideration of the review reports of other auditors referred in paragraph number 8D below, except for the possible effects of the matter stated in paragraph 3 and 4. Now, when I say except, that is a qualification. So this particular line, except for the possible effects of the matter stated in 3 and 4. And why I'm saying the word possible effect? The reason because it's a limited review. I have not performed the detailed audit to ascertain the full impact. Nothing has came to our attention that can causes us to believe the accompanying statement prepared in accordance with the recognition principles, everything of section 133 of the act, and relevant rules, accounting principles, regulation 33. Okay, this is my applicable financial reporting framework. From here till here, it's my applicable financial reporting framework. Okay, as amended, including in the manner which is required, as amended, including the manner in which it is to be disclosed or contains any material misstatement. Okay, so what they are saying is, except for the matters stated in paragraph 3 and 4, nothing has came to our attention. This is a point very important. Except for that, nothing has came to our attention that can lead us to believe that the accompanying statement prepared in accordance with this as amended, including the manner which is to be disclosed, contains any material misstatement. Okay, so kind of a modified or qualified opinion. Okay, kind of a qualified opinion that has been issued over here. Now, I show you one more area. So remember, we have a requirement of verifying the going concern related areas also. Okay, we have a going concern related matters also that we need to address while performing the limited review. It's not only the review procedures, but we have to look for the going concern related areas. The same way we have a SA 570. I'll show you one such paragraph in limited review report. Again, we draw note to the attention to the note number 7 of the statement, wherein the company has loans that have fallen due for the repayments and the loan which have been fallen due of subsidiary companies for which the company is the guarantor. Its current liability exceeds the current asset and have incurred losses during the current quarter. And the earlier years indicate that the material uncertainty exists that may cast a significant doubt on company's ability to continue as a going concern. However, for the reasons fully described in the aforesaid notes of the accounts of the company has been prepared as a going concern basis. Our conclusion on the statement is not modified in respect of the matter. And if you see, this particular statement, okay, and the requirement of SA 570 are on the similar lines. In SA 570 also, we, report on the matters related to the company's ability to continue as a going concern. Or when we have a, material uncertainty that may cast significant doubts on entity's ability to continue as a going concern, but we still say that the going concern, use of going concern assumption is appropriate. Okay, so we have some requirement in SA 570 on the similar lines. We discussed that we have a requirement in SRE 2400, and here, the same has been included, on that particular lines. So we saw a kind of a qualified opinion, and we saw a kind of a going concern paragraph requirement. Okay, so whenever we are issuing a qualified opinion, unmodified opinion, we need to give appropriate heading: qualified conclusion, adverse conclusion, or disclaimer of opinion conclusion. Then, and we need to provide a description of the matter that is giving rise to the modification. Okay, under the basis of qualified conclusion, basis for adverse or basis for disclaimer conclusion as appropriate. Now you might be seeing that is not there in that particular report. We did not see a heading. Reason because that is SRE 2410, not SRE 2400. I'm just showing you example that is much related to the SRE 2400, but that is 2410. Okay, so there is some difference. We'll talk about the difference in a while. But having said that, the wordings of the paragraph, internal wordings will be same. You might not find a heading, but internal wordings will be same. Okay, and see what are the wordings. These are the wordings which are there, paragraph wordings, and this is for the qualified conclusion on the financial statement. And on the similar lines, when I say, when to give qualified and when to give adverse, again, if the modifications are material but not pervasive to the financial statement, then qualified conclusion. And if modifications are material and pervasive to the financial statement, then adverse conclusion. Same the way we have SA 705. Okay. Similar to SA 705 on deciding the type of modification. Okay. And these are the paragraphs that are required to be included. Now, this is for the qualified conclusion. And what is it? Let us read one example. Based on our review, except for the effects of the matter described in the basis qualified conclusion paragraph. Okay. Now, the example we saw, instead of this particular wording over here, described in the basis of conclusion paragraph, we had described in paragraph number 3 and paragraph number 4. Remember? In example, we had described in para 3, 3 and 4 of the report. In example. So, described in the para 3 and 4, nothing has came to our attention that has could cause us to believe that the financial statement are not prepared in all material respect in accordance with the financial reporting framework. Clear? Any doubt? So this is with the qualified conclusion. And again, this is for the adverse conclusion that based on our review, due to significant matters described in the basis for adverse conclusion paragraph, the financial statement are not prepared in all material respect with accordance with the financial reporting framework. The wordings will go accordingly. And the way sorry. And in the basis for conclusion paragraph, okay, we need to provide these details. When we are, when they were saying paragraph 3, paragraph 4, we need to provide these details with respect to the material misstatement. That is, describe and quantify the effects on the financial statement of the misstatement. And if there is, disclosure, then explain how disclosures are misstated. If there is a financial statement item, then quantify the detail. If there is a disclosure missing or something related to the disclosure, then specify related to the disclosure. If some information is omitted, describe the nature of information omitted. Okay. Let us see in our example how it was. So it was paragraph 3, paragraph 4 above. Let us read 3. This one. We refer to note number 7 of standalone of statement regarding non-provision of the interest of amounting to this much lakhs for the quarter this and this much for the this on the borrowings of the wholly owned subsidiary this company. The company has not provided it for the interest for the reasons stated in the aforesaid note. The same non-provision of interest on the borrowing of this is not in accordance with the provision of NDS. This is this and this is this. Had the interest been provided by the finance, the company, the finance cost of the quarter would have been higher by this much lakh, and the loss before tax would have been higher by equivalent amount. Accordingly, the net worth of the group would have been lower by this and this respectively. So they have provided, kind of quantification of the amount. So they have identified the amounts over here. What is the amount involved? Where it is impacting? Okay, borrowings, interest amounting to which would is not appropriate as per the borrowing cost and NDS. Okay, and it would have increased my finance cost. Okay, it would have impacted loss before tax, net worth, everything. Wherever it is impacting, I have quantified my impact. I have quantified my impact. Okay, so this is how you need to specify or quantify the impact of a misstatement. Like, you can say this is the basis of conclusion paragraph kind of, and this is how you need to quantify. Now, next part is when you are not able to obtain sufficient and appropriate audit evidence, kind of when you want to issue disclaimer of opinion. Okay, if you are unable to form conclusion on the financial statement due to inability to obtain sufficient and appropriate audit evidence, in that case, either express a qualified conclusion if the misstatement is material but not pervasive. If the misstatement, the possible effect on the financial statement, okay, of undetected misstatement is both material and pervasive, then issue a disclaimer of opinion. Okay. Now, in our example, sorry, just give it there. In our example, okay, we have a qualified opinion. We saw a qualified opinion in our example. Now the question comes is, if we have a qualified opinion in our example, then it could be two scenarios. One, either it's a material misstatement identified, or it could be we are not able to obtain evidence, but the impact of the same is not, it's material but not pervasive. Okay, impact of which is material but not pervasive. That could be the second scenario for the qualified opinion. This one. Really sorry for my bad tone. Okay. So the second example means this one, qualified opinion, but impact is material but not pervasive. So I will issue a qualified opinion when I'm not able to obtain appropriate audit evidence. And I have a classic example of that. This one, the paragraph number 4. If you read paragraph number 4, we draw attention to note number 6 of the consolidated financial results, which set out the fact that the Vidarbha Industries, whatever the company is, has incurred operating losses during the quarter ended this, as well as during previous year. Its current liability exceeds current asset. Purchase power agreement has terminated. Plant remaining unoperational. One of the lenders has filed insolvency. Events, conditions indicate material uncertainty exists that may cast a significant doubt on entity's ability to continue as a going concern. However, accounts have been prepared on the going concern basis. We are unable to obtain sufficient and appropriate audit evidence regarding management use of going concern assumption. In the view of non-provision of interest as explained in paragraph 3, together with the events and condition more explained in the note 6, the financial state result does not adequately support use of going concern assumption in preparation of financial statement. Okay. So they are not able to obtain sufficient and appropriate audit evidence. As a result, they are qualified the same. Okay. Along with the non-provision of the interest. So classic example of, you can say, going concern plus unable to obtain sufficient and appropriate evidence. I'll say sufficient and appropriate evidence, not audit evidence. Okay. That is sufficient, and this is appropriate, and this is evidence. So, good example of going concern and not unable to obtain sufficient and appropriate evidence. That's why, in your opinion, you have a word possible effects. You have a word possible effects. The reason because of the unable to obtain sufficient and appropriate audit evidence. Okay. In the way we had here, the possible effects. Okay. See, possible effects or possible effects. Similar lines, we have a, the term possible effects over here. And accordingly, you have a wordings of paragraph. So on similar lines, wordings of paragraph for both, for qualified opinion or disclaimer of opinion. It's on the similar line what we have discussed as per SA705, that the practitioner does not express an opinion when you are disclaiming the opinion, disclaiming a conclusion. Okay. Practitioner does not express a conclusion, and due to significance of the matter describing basis for disclaimer of conclusion paragraph. One more thing I want to highlight over here. Till now, I have not purposefully highlighted that. See, wherever we are talking about opinion, we are using a term conclusion, not the opinion. You see, everywhere, we are using the term conclusion, not the opinion. And I'll go to the top. when we started SRE. So when I was discussing SRE, okay, I started discussing SRE 2400. I discussed about, with the term opinion so that, you can correlate. But it is actually the conclusion that we are talking about as of now. Okay. That practitioner's conclusion is based on the practitioner's obtaining limited assurance. So we are talking about conclusion here. Okay. Practitioner's conclusion. So the objective of the practitioner over here is obtain limited assurance primarily by making inquiry and performing analytical procedures to express a conclusion. Again, the term which I am using over here is conclusion, to express a conclusion, not the opinion. So in SRE, instead of opinion, we use conclusion. Now why? The reason, because very pretty simple. The reason is pretty simple. Why we are not using the word opinion? Why we are using the word conclusion? The reason, because of the negative assurance. The reason is of negative assurance that after performing the see, by performing inquiry and analytical procedures, you cannot issue an opinion. You cannot reach to an opinion. That is for sure. So if by performing analytical procedures and inquiry, if you cannot reach to an opinion, you can reach, okay. And if you do not identify anything, then you can at least reach to a conclusion. Okay. That my conclusion is, after performing inquiry and analytical procedures, that, nothing has came to my attention. That is the conclusion I am giving, not the opinion. Opinion you give when you have the sufficient and appropriate evidence to form a basis for your opinion based on the reasonable assurance. Okay. But when I have performed limited review procedures, when I perform the review procedure, I cannot issue an opinion. I can only conclude that, okay, after performing the procedures, I can conclude that, okay, nothing has come to my attention. I cannot issue an opinion. That's why in SRE, we will use the word conclusion, not opinion. Okay? Specifically, I kept it for the last because, if I would have explained it in start, it would have created, some kind of misunderstanding or confusion. But just to, make sure we are aligned, everywhere, we will see the word conclusion. So whenever you use SRE or there is a question on the SRE, we do not issue an opinion, we issue a conclusion. Okay? Any doubt till now? Any doubt? Any doubt, guys? So there is one doubt that since beginning we have been studying that objective SRE is the practitioner has a reason to believe that the financial statement are materially misstated. Then why an unmodified opinion? No. So here, the objective of the practitioner is to form a conclusion, is to issue a conclusion. Okay, to reach to a conclusion that nothing has came to his attention which could lead him to believe that financial statements are not materially misstated. Kind of a negative assurance. Again, conclusion. He has to reach to a conclusion that financial statement are not materially misstated because nothing has came to his attention. That's why unmodified conclusion, unqualified conclusion. We are using the word conclusion, okay, with the qualified, unmodified, or modified. So when I say qualified conclusion means we have reached to a conclusion that we are saying there is something which is leading us to believe that financial statement are materially misstated. Adverse conclusion. I'm not issuing the word opinion. Adverse conclusion. Although I was still now using the word opinion to explain you guys, but I issue a adverse conclusion that I am concluding financial statement are materially misstated. I'm concluding that based on my procedures, limited review procedures I have performed. I'm concluding that financial statements. I'm concluding that nothing has came to my attention that could lead us to believe that financial statements are not materially misstated. Unmodified conclusion. So I conclude, not issue a opinion. There is one more doubt with respect to the SEBI circular on the quarterly results of the listed entity. See, SEBI circular or quarterly results of the listed entity and responsibility to report. Basically, see, if there is something that practitioner has came that has come to the practitioner's attention, okay, with respect to fraud or non-compliance, where the practitioner should report. Now the question comes is the practitioner should report. Okay, we discussed in the last session also on that area. It may happen that the practitioner is not a statutory auditor. In this case, he will be not a statutory auditor when there is a SRE 2400. Now, in that scenario, it's not a pretty simple answer. It's not a straightforward answer. Reason because SRE 2400, okay, is applicable when practitioner is not a statutory auditor. There are certain things where the statutory auditor has a statutory requirement to report. But when I talk about person not being a statutory auditor, then it's a gray area. It's not a specific area, in that case, code of ethics, which is applicable to a practitioner being a chartered accountant in practice, public practice, he need to follow that. And accordingly, he need to take a decision whether to report the matter to a particular person or not. Again, it is case to case basis. Who are involved? What is the matter? What is the confidentiality requirement, disclosure requirement, terms of engagement, everything. That totally depends upon all these things. And it's not a simple one single answer for that. So, SEBI circular, again, may not be applicable to him, may be applicable to him based on the review engagement. It could be a review engagement of non-listed entity. Okay, private limited entity, or could be a different scenario. So that is again, case to case basis we need to see. Any doubt, guys? Any doubt? Till now, clear everything? Yes, no, something. Is it clear till now? Okay. So, if everything is clear till now, Let's take one question. Okay. And then we can proceed further. Okay, let me take one question. Mr. X was appointed, I would write, practicing or Mr. X was appointed by ABC Limited for performing limited review of the financial statement prepared in accordance with the guidelines and the terms and conditions agreed between ABC Limited and DEF Limited. Okay. So that is a special purpose framework. These financial statements were prepared for DEF Limited's uh, for DEF Limited. Okay. So these financial statements were prepared for the DEF Limited. Now, then expand this one so that you can see. Okay. Mr. X, while performing the limited review, identified that management has not provided for slow moving and non moving inventory in the financial statement. Okay. Slow moving or non moving inventory in the financial statement. The provision for slow moving and non moving would have been rupees 65 lakhs. Okay. If it would have been provided in financial statement. Okay. If it would have been provided in financial statement. Now, as per the guidelines and terms and conditions of the contract agreed between both the companies, any misstatement more than rupees 5 lakhs is required to be considered material. Okay. So you have a level of materiality for that. Mr. X decided to perform further additional procedures in order to ascertain the impact, the possible effects of the misstatement identified in inventory provision. Okay. However, management is of the view that Mr. X is only performing limited review procedures, and hence he cannot demand information that is usually required. He cannot demand information which is usually required under audit. Hence, Mr. X needs to conclude based on limited information shared with him. Kindly guide Mr. X on non-availability of the information for assessing the possible effects of the misstatement. Okay. Basically, here, so Mr. X has performed certain procedure and he has identified, okay, there is, some misstatement present. Misstatement is that the provision for slow moving, non-moving is not there of 65 lakhs. Okay. So provision for slow moving and non-moving would have been 65 lakhs. Okay. If would have been provided, but it is missing. Okay. And in order to ascertain possible effects of the misstatement, okay, Mr. X decided to perform further procedure. However, management is of the view that Mr. X is only required to perform, is only required to perform limited review procedures, and hence he cannot demand information which is usually required under audit. So you need to guide Mr. X, okay, what he should do on non-availability of the information for assessing the possible effects. So you tell me what Mr. X should do over here. Pretty simple, straightforward question. Straightforward question, pretty simple. So based on this question, based on this scenario, two questions you need to answer. Number one, whether Mr. X should perform additional procedures to identify the possible effects of missing provision. Number one, whether Mr. X should perform additional procedures to identify possible effects of missing provision. See, as of now, he has an amount of 65 lakhs. That the provision, if there would have been provision, then this would have been the provision. Okay, a tentative amount is there. I will write it over here. It's a tentative provision. Provision amount. Okay, so this is the tentative provision amount. Now he wants to understand whether what could be the possible effects, and for that he wants to perform additional procedure. Now the question number one is, this is a limited review. This is a limited review. Then in that case, should Mr. X perform additional procedures? When he have a tentative amount, should he go and perform additional procedures to identify possible effects? Question number two. Let's say if you say yes to one, okay, then what Mr. X should do if management is not providing the required information? The first one is whether Mr. X should perform additional procedures to identify the possible effects of missing provision. So we need to understand this is a case of limited review. Okay, so this is limited review, not audit. So should Mr. X perform? First of all, first question. If yes, then second question. What would be the impact? What Mr. X should do if management is not providing the information? Pretty simple. Come on, guys. You need to answer for both. You need to give answer for both questions. Come on, quickly. Pretty straightforward, guys. There is nothing difficult in this. We have discussed in detail. Very good, Tanisha. Very good. Very good, Tanisha. Good, Shruti. Very good. Yes. Very good, Suraj. Yes. Yes, Charu, very good. So, so answer to the first question is yes, Mr. X has to perform additional procedures. Okay. Although it's a limited review, Mr. X has to perform additional procedures. Number two, what should be the case? What should he do when management is not providing the information, required information? If management not providing the information, there should be three steps for that. First, communicate to those charged with governance and explain this is the limitation. Number two, if information is not available, okay, and if there is a limitation on the scope, okay, withdraw from the engagement because your precondition is not getting fulfilled. And if withdrawal is not possible, okay, or if withdrawal is not possible, then modify the opinion, modify the conclusion, my mistake. Now, modification will totally depend upon the materiality and pervasiveness of the possible effect of, unable to obtain the evidence. Okay. So, yes, additional procedures are required. And three steps, what he needs to do is communicate. If still not getting information, intimate that that the practitioners want to withdraw, and if he is not able to withdraw because law or something doesn't permit him, then modify the conclusion. Clear? Now, one small task I will give you before going on the break, that is write appropriate, write appropriate paragraph for basis of, I'll say, qualified conclusion. I'm specifying this is the qualified conclusion. Okay. So basis for qualified conclusion, write an appropriate paragraph. Okay. A small paragraph, appropriate paragraph based on this matter. That if you are the auditor, how will you describe the matter in your basis of qualified conclusion? Okay. Few lines I'm expecting. And once we will come from break, till that time you can write in chat. Let's take a 10-minute break. In break, if you get time, write the conclusion. After the break, we'll discuss the wordings and then accordingly we'll take further. Okay. Let's take a quick 10-minute break and you can, meanwhile, have the break and write the conclusion. Okay. Let's continue the session. So before going on the break, we discussed that I'll give you one small task. You need to draft basis for conclusion, basis for qualified conclusion. Okay. So let us see what basis for qualified conclusion we have received. I'll just keep it here some basis for qualified conclusion, and we can see how can like we can whether it's correct or we can modify the bit. So it's this is a one first answer that we have received it. So this is for qualified. Generally, it should be conclusion. Okay. Based on the engagement procedure performed and relevant evidence obtained during our review engagement, we came across that the slow moving inventory stated in the current asset for which no provision has been provided by the management, which has a material impact of rupees 65 lakhs. We have qualified our conclusion due to this matter, which has materially impacted our FS as a whole. Okay, good. I would say this is a good conclusion. Yes, good one. Then we have another one. Let me I'll write it here. Okay, so this is in the financial statement. The slow moving and non moving inventory information is not given. The provision for these items is 65 lakh, which is material in nature. We are unable or restricted to obtain access to the relevant information. Consequently, we are unable to perform additional procedures we consider necessary. This is also good. Very good. Good one. Yes. Okay. Any other guys? Like guys, if you want to provide your conclusion, one just giving you 5 more minutes. Write basis for conclusion, and then we can proceed further. Come on, guys. Let's write basis for conclusion. I'll give you 5 more minutes. Okay, and then we can proceed and we will discuss what should be the appropriate way to describe a basis for conclusion. Come on, guys. Take 5 minutes more, but let's discuss the basis for conclusion. Okay, how we need to write. Come on, guys. I'm waiting for your answers. Anyone would like to provide his basis for conclusion paragraph? Come on, guys. I'm waiting. I just received only two answers till now. I'm waiting for further answers. Okay, so let me write one paragraph for you guys, and then I'll provide you how it should be written. Okay, so I have written something. Okay, I have one more received one more answer. Okay. Meanwhile, let me also show my paragraph that I have written. So how it should be basically. Okay, if I have to write it down, like, okay, so we draw your attention. Usually how we write in basis for conclusion paragraph, that we draw your attention to the inventory in note this of the financial statement amounting to this lakh. Based on the review procedure performed, it has come to our attention that management has not provided provision for slow moving and non moving inventory. Based on the preliminary procedure performed and inquiry conducted, we estimate that the provision should have been of rupees 65 lakhs. If provided in the financial statement, then this would have resulted in a decrease in inventory, current asset, and net asset to that extent. Okay. However, we are unable to calculate the exact impact or the possible effect of non-providing for slow-moving or non-moving items due to there is some trouble. Due to unable, okay, due to non-availability of the information and evidence, okay, due to non-availability of the information and evidence on account of limitation imposed by the management. So you can write in this way, basically what a paragraph or basis for conclusion paragraph over here. Okay. So some basis for conclusion paragraph. Example of basis for conclusion paragraph on this area. So one more answer we received, and I'll just write it here. This is in course of performing review procedures, we came across the fact that the company has not made a provision for slow moving and non moving inventory amounting to 65 lakhs, and this matter has been brought in the attention of the management, and those are still we are not able to provide the information for performing other procedures, which may lead us to disclosure of some material facts. Therefore, we conclude that the FS are not being prepared. No, whenever we write basis for conclusion, we do not conclude in that. So here, this particular line is kind of a conclusion you are giving. Basis for conclusion only provides you a conclusion basis, like why you are concluding that they are not prepared in material respect. This should be part of your conclusion paragraph. Okay. Whatever you are giving a conclusion, qualified conclusion or adverse conclusion, whatever it is, this should be part of your conclusion paragraph. Rest of the things are still good. Okay. But the last line should be part of your conclusion paragraph, not the basis for conclusion. Basis for conclusion, why you are concluding qualified or adverse, provides that. But when I talk about therefore we conclude is a conclusion, not the basis. That's why it should not come. Rest, everything is good in this one also. So I hope you guys now understand that, okay, how we need to write a basis for conclusion paragraph with respect to, modified conclusion in this case. Clear? Any doubt, guys, with respect to this? Any doubt? Okay. If no, let's proceed further. Okay. So then SRE provides you some minimum items that are required to be included in a practitioner's report. Content. So it is, see, like for example, a title, addressee to whom you are addressing, an introduction paragraph that identifies financial statement, refers to the summary of significant accounting policies, other explanatory information, states that the financial statement has been reviewed, a description of the responsibility of the management. Then, if financial statement are special purpose, then description of the purpose of the financial statement, intended users, okay, a note of special purpose financial statement, management choice of financial reporting framework, what management has chose with respect to the financial reporting framework, then description of practitioner's responsibility, then description of the review of financial statement and its limitation, like review is conducted under SRE, it's a limited review assurance. Practitioner performs procedure primarily consist of inquiry and analytical procedures. Okay. Then these procedures are in review substantially less than performed in accordance with the essay. A paragraph with the heading of conclusion. Okay, what is the practitioner conclusion with respect to the financial statement and a reference to the applicable financial reporting framework. Then practitioner conclusion on financial statement is modified. Then appropriate paragraph, okay, containing the heading that it's a modified conclusion, okay, and a description of the matter that is giving right to the uh, modified conclusion, kind of basis of modified conclusion paragraph. A reference to the practitioner's obligation under SRE with relevant ethical requirements, date of the practitioner's report, okay, then practitioner's signature and place of signature. So some basic items or structure that should be there of a practitioner's report. Okay, when we are talking about report under SRE. So on the similar lines, we have seen various reports. It's similar on the similar lines. Okay. Now coming to the requirement of EOM, OM paragraph. The way we have SA 706. Sorry. The way we have SA 706. On the similar lines, we have a requirement of OM and EOM paragraph in SRE also. Now, we may include EOM paragraph and OM paragraph. Okay. Same on the similar line that is there in SA 706. It is over here also that if practitioner consider it necessary to draw attention to a matter presented and disclosed in the financial statement, in the practitioner judgment is of such importance that is fundamental to the user understanding of the financial statement, then such matter can be presented in EOM paragraph. Okay, draw attention to the already disclosed matter, and that should not be a qualification or misstatement. Okay, so not likely to be a material misstatement presented in the financial statement, then only you can go to EOM paragraph the way we have in SA 706. Similar line, there is nothing difficult, nothing change here. Same way, if practitioner considers necessary that to communicate other matters then that are presented disclosed in the financial statement in practitioner's judgment is relevant to the user understanding of the review, practitioner's responsibility or practitioner's report, and is not prohibited by law or regulation, then he can do it in other matter paragraphs. Earlier in SA 706, we used to have audit, auditor's responsibility, auditor's report. Instead of that, we have a review, practitioner's responsibility, and practitioner's report. Nothing changed here. If other legal reporting, other reporting responsibilities. So other reporting responsibilities kind of, if there is any other law or regulation which requires the practitioners to report, okay, some additional matters over and above limited review, then a paragraph that other legal and regulatory requirements should be added, and under that, okay, under that paragraph, the matters are required to be stated. It is similar to the other and legal regulatory requirements we have in audit report, because these are certain requirements which are prescribed by law or regulation in an audit. Similar way, if a particular requirement has been established by law or regulation, under the case of a limited review of a, where law or regulation is applicable, then the practitioner has to specify that matter under a separate head, that is report on other legal and regulatory requirements, and that is, should be specified separately. Then documentation requirement on the similar line we have in other assays or SA 230 documentation. Similarly, we have documentation requirement for SRE also. All the critical things are required to be documented when you are performing, review engagements. We have already discussed audit versus review part. What is the difference between audit and review? Okay, you can go. It's very important. I will request everyone to go this particular part also. Kind of, it's a reasonable assurance. We call it here in a review as a limited assurance. We perform elaborate and extensive audit procedures. Here, few procedures are performed. We draw reasonable conclusions. Okay, here is a limited conclusion. Provides an assurance. Now, the language is negatively worded. It's a positively worded language. Okay, and assurance opinion. We give a opinion. Here we give a conclusion, negatively worded, positively worded. So whatever we have discussed till now, it's the same difference. So that was my SRE 2400 in nutshell, in detail. So rather not in nutshell, but in detail, SRE 2400. Any doubt till now for SRE 2400? Any doubt? Any doubt, guys? Any doubt? Reporting responsibilities, yes, they differ between audit and review. So your reporting responsibilities are also a bit different. But yes, at the end, you need to issue a conclusion in a review, but you need to issue an opinion in audit. Any doubt, guys? Any further doubt? Okay. If no further doubts, let's proceed for the SRE 2410. Now, trust me, once we have discussed SRE 2400, 2410 will be pretty much easy and we can go through very quickly to this SRE. Reason because our base is clear. Now, this is a specific case of, review engagement with respect to the interim financial information. Okay. Now, SRE 2410 talks about review of interim financial information that is being performed by the independent auditor of the entity. Till now, we were talking about practitioner. Now we are talking about auditor. Till now, we were talking about historical financial information. Now we are talking about interim financial information. Okay. When I talk about interim financial information, again, the question goes is, what is interim financial information? Now, interim financial information, if Ind AS is applicable, then as per Ind AS 34, interim financial reporting, the definition of interim financial information is there. But in normal circumstances, what is interim financial information? That is prepared and presented in accordance with applicable financial framework, okay, which either is a complete set or a condensed set of financial statement for a period that is shorter than the entity's financial year. Okay, either it could be a complete set or a condensed set, okay, for a period shorter than the entity's financial year, okay, prepared in accordance with applicable financial reporting framework. Could be AS, could be Ind AS, or could be any other, financial reporting framework like Regulation 33. So, That is your interim financial information. Now, the objective of SRE 2410 is specific, pretty much clear. Okay. Now, the objective here is that the objective is, the to conduct a review engagement. Okay. To conduct a review engagement of interim financial information that enables the auditor, not the practitioner, but the auditor to express a conclusion. Okay. So, to conduct a review engagement of review on interim financial information that can help auditor or enable the auditor to express a conclusion. Now, what is the conclusion that we are seeing here is whether on the basis of the review, has anything came to the auditor's attention that caused the auditor to believe that the interim financial statement is not prepared in all material respect in accordance with the applicable financial reporting framework. Again, because it is a review, it will be a negatively worded. Okay. And on the similar lines, we have seen, SRE 2400 review objective. See, on the similar lines, sorry. The way we have in SRE 2400, okay, the way we have in SRE 2400, sorry, on the similar lines, we have in 2410. That has anything has came to the auditor's attention that can lead him to believe that earlier we were talking about financial statements. Okay, now we are talking about interim financial statements, interim financial information. So the change is the interim financial information. Another change is the word auditor instead of practitioners. Okay, two changes. There is no change. If I go back and if I show you about what was the objective of under SRE 2400. See, objective under SRE 2400 is practitioner here. Obtain limited assurance by making inquiry and performing an idea whether financial statement as a whole are free from material misstatement, thereby enabling practitioner to express a conclusion whether anything has came to his attention to believe in financial statement, not the interim financial information. So that word financial statement is there and the word practitioner is there. Okay. Unlike in 2410, these two words change to auditor and your interim financial information. Rest everything is same. And wherever we were referring to the word practitioner, now we will refer to the auditor. Auditor is required to make inquiry and perform analytical procedures and other review procedures. Okay, in order to reduce a moderate risk level of expressing an inappropriate conclusion with respect to the interim financial information. Same that we have seen in 2400. Everything is same. SRE 2400 2410 is a specific SRE applicable. Okay, in on the grounds of a you modify 2400 and apply to a specific scenario that will become to SRE 2410. There is no change in that. For example, agreeing the terms of engagement. Okay. The way we have seen in SRE 2400, similar it is there in SRE 2410. That terms are required to be agreed before start of the engagement. Okay. To avoid misunderstandings. Understanding the entity and its environment with respect to internal and its internal controls. Now, wherever we were understanding the entity and its environment with respect to the financial statement, now we just need to understand with respect to the interim financial information. preparation and presentation of interim financial information. Okay. Now we need to perform procedures in SRE 2410 or a audit review engagement of interim financial information with respect to potential misstatements that have a likelihood of their occurrence, plus inquiries and analytical procedures and other review procedures that provide auditor a basis for reporting whether anything has came to auditor's attention that cause auditor to believe that the interim financial information is not prepared in all material respect with the applicable financial reporting frame. Same as we seen in SRE 2400. Just applicable with respect to the interim financial information. So a bit change with respect to some of the procedures that I highlight is one, the auditor who has audited entity's financial statement for more than one annual period. Okay, let's say we are talking about auditor here, not the practitioner. Now, auditors are required to perform annual audit also. So, let's say, for example, I was the auditor for last 2 years. I'm the auditor for the last 2 years. I might have already obtained, the understanding of the entities and its environment for last annual audit, for the, last year annual audit. Now, in planning a review and review of interim financial information, I just need to update that understanding. Okay, I just need to update that understanding. I have already that understanding because I am the auditor. I am already performing the annual audit. So I am already, getting that information during the audit. I'm just required to update that information. Okay, that understanding. So if I have already obtained it, I just need to update it. And you might perform, see, in case of SRE 2410, there are two things that usually happens in practically. We perform a review, simultaneously we start our audit. Okay. Along with the limited reviews, we start performing our audit also. So we perform dual purpose testing at some places. For example, let's say we are being appointed auditor of a particular company. Okay. We know that we need to perform the audit. So what we do is, audit requires planning, risk assessment, a lot of things. So let's say we are performing, limited review for the second quarter. So while performing the limited review of the second quarter, what we may do is we may also, start performing detailed inquiries, planning, risk assessment, and everything. So we may also perform inquiry for limited review, we may also perform inquiry for audit. So it may happen that we perform a dual purpose inquiry at the time of limited review itself. Okay, it can happen. And usually it is a scenario where this happens. By the end of third quarter, we start testing dual purpose testing. So this is the way, we usually perform in a limited review when the auditor is performing for the interim financial information. These are some procedures or, that are done during the, understanding the entity phase. So what can be done while understanding the entity and its internal controls? So these are some procedures basically. Okay. Similarly, we have in SA 315 the procedures. On the same line, you will see the procedures over here. There is nothing different, so nothing different over here. Okay. So there is one doubt that there is a line that practitioner has to determine need to remind existing terms of engagement. that is applicable when you have a multiple or recurring review engagements for the practitioner. Okay. If you have a recurring review engagements, review engagement happening every quarter for the practitioner, then you need to remind the existing terms and conditions to the management. Kind of that. Second question is why moderate level of risk for expressing an opinion or conclusion? Moderate reason because see, you are issuing a limited opinion. Okay. You are issuing a limited assurance conclusion. It's a review engagement. So that's why the level of risk should be moderate. When you need to see, the higher the level of assurance, the lower the level of risk can be. If I'm having lower of level of assurance, then I can accept a higher level of risk. So limited assurance with a moderate risk, fine. Reasonable assurance with a low risk, that is the phase. So higher the level of assurance, lower the level of risk for expressing an opinion or conclusion. That's why moderate level of risk with limited level of assurance. Can SRE 2410 auditors report to outside entities regulator? Can you just explain a bit more on this particular question, Pansha? Just so that I can understand the question further. Okay. Now, it could be a case, you are the first auditor and you are performing the audit for the first time and you are performing the review for the first time. If that is the case, then you need to, perform detailed procedures, okay, to understand the entity, its environment, including its internal control, okay, which may relate to both your preparation of annual and interim financial information. So if you are recently appointed auditor, you may require to perform procedures which are applicable for the audit also and for the interim financial uh, information also. So auditor will be the same, who will be performing the statutory auditor, annual statutory auditor, and the review for interim financial information. See, on the similar lines, we have, analytical procedures, inquiry, and other review procedures. So here, auditor is required to perform analytical procedures, inquiries, and other review procedures. Okay. On the similar lines that we have seen in SRE 2400, it is applicable in the 2410 also. Okay. Generally, which may include, procedures like, inquiry with the persons making inquiries, okay, for financial and accounting matters, okay, applying analytical procedures, understanding the entity, on the similar lines that we have seen in SRE 2400. So this is again examples of the procedure that could be performed. I'll not discuss this in much detail because it's the same that we have already discussed. But I'll request you guys to read this once because it will, give you a good clarity. Just to highlight few things, like for example, non-compliance with laws and regulations. Okay, or for example, significant changes in contingent liabilities. Okay, related parties, transactions, knowledge of fraud or suspected fraud. Okay, the way we have seen in SRE 2400, similar on the similar lines. There is nothing different over here. The way I was talking about, that auditor may perform many review procedures before or simultaneously with entities' preparation of financial information. Okay. So see, when it is a interim financial information, so what happens is, as and when entity prepares their financial information, interim financial information after the closure of quarter, the auditor starts performing the procedure along with the preparation by the entity. Because usually, you might have 45 days or in some cases lesser duration to report upon the interim financial information. In that case, auditors perform simultaneous procedures along with entity prepares the financial information. In those cases, let's say for example, 30th September ended. Now I need to report on the quarter ended 30th September. Management started preparing in October. So let's say I have a deadline to report by 12th of November. Now management will start preparing. So I have a limited period. If I have a limited period, I cannot wait for management, to prepare their financial information, give it to me, and then I perform all the procedures. It will be too late for me. So what I do is, in some cases, is I start performing my procedures as and when management starts preparing the information simultaneously. And by the end, I need to update some procedures. I need to update my information. Okay. At the end of the once management complete their preparation and presentation, I can, I need to update whatever I have performed. Okay. So it may happen that, simultaneous procedures are performed as and when entity has started their preparation of interim financial information. Usually in a review of interim financial information does not require corroborating inquiries about litigations or claim. We do not we are not required to corroborate inquiries about litigations and claims. Therefore it is not necessary to send an inquiry letter to the entity's lawyer, okay, with respect to the litigation and claim. However, if something has came to the auditor's attention that causes auditor to question whether the interim financial information is not prepared, then auditor may do a direct communication. But unless and until if nothing has came to auditor's attention, then there is no requirement, okay, to corroborate about litigations and claim with respect to the interim financial information. Now, again, on the similar lines, auditor needs to, obtain evidence that interim financial information agrees and reconciles with the underlying accounting records by tracing interim financial information to the accounting records, reconciling and agreeing with the accounting records, general ledgers, okay, other supporting data, whichever is, provided and available. Similarly, on the same line that we have in SRE 2400. Again, all the events up to the date of review reports, subsequent events, okay, entity's ability to continue as a going concern, same, there is no difference, okay. The matter we have seen, for example, in SRE 2400 with respect to the going concern, similarly, it is applicable to here. Material adjustment should, with respect to the subsequent events, if any event is there. So I will write it here. Subsequent events, going concern, okay, adjustment of material events, okay, similar on the line of SRE 2400. Evaluation of the misstatement, how auditor should evaluate the misstatement, okay. He should, agree individually and aggregately whether uncorrected misstatement that have came to the auditor attention are material to the interim financial information or not, okay. So again, including inadequate disclosures, missing information, professional judgment that are required to be exercised while evaluating the materiality of any misstatement. on the similar lines that we have in SRE 2400, or you can say SA 450, similar to SA 450. Okay. Then again, management representations on the similar line that we have, SA 580, similar. There is no change on that. Okay. Then auditors. Now, this is a very important part, a different one. Auditors' responsibility for the accompanying financial information. See, in certain scenarios, interim financial information might be, okay, might be presented with other information. Okay. The way we have, requirement of other information in annual report. Okay. Auditor's responsibility with respect to the other information. You might have seen, we discussed the same when we were discussing SA 720. Remember? SA 720, auditor's responsibility relating to the other information. Similar to SA 720. Okay. In the same way, we have the auditor's responsibility with respect to the other information accompanying the interim financial information. We need to read, auditor needs to identify material inconsistency. Okay. If required, then make amendment necessary in the other information. If management refuses to make amendment, then auditor needs to consider the implication on the review report. Same the way we have in SA 720, we have discussed in SA 224, SRE 2400. Same, it is applicable over here. Okay. So, while reading the other information, if identify material inconsistency, then what auditor should do? Discuss the method with entities management. Okay. And, if so, all the required details are, required to be made over here. Similar lines. On the similar lines, we have in SRE 2400, SA 720, it's there here. Communication with those charged with governance and management, similar. There is no change compared to what we have seen, in SA 260 and 265. Okay. So whether to modify the report, possibility from, the communication with respect to important matters, and, if you are not getting appropriate response from the management, then you need to consider whether to modify the report. What is the possibility from withdrawing the engagement, possibility from resigning the appointment of the audit of the annual financial statement. So here, see, you are the auditor. Being an auditor, SA are applicable to you for the annual audit. On the similar lines, okay, the same requirements will be applicable to you for the interim financial information through SRE 2410. So you need to understand that on the earlier we were talking about practitioner. Now you are not a practitioner. You are the auditor. You have the responsibility to perform the annual audits also. You have the responsibility to perform the review of interim financial information. So whenever we talk about withdrawing, it will be withdrawing from the annual plus withdrawing from the review of interim financial information. It will work in both cases. Not a single one. Okay. So, we need to understand that here we are talking about the auditor at each and every place. So auditor has already some requirement under SA that he needs to fulfill. Okay. So along with that, he needs to fulfill the requirements and the responsibilities which are there under SRE, which are all similar on the similar lines. So it can happen that auditor is fulfilling both together. Like if I want to communicate as per SA 260, I may also communicate under SRE, the matter. So I may prepare a single communication to the management, which will satisfy the compliance requirement of SA 260 plus SRE both. Okay. Nature, extent, and the results of the review of entering financial information. Now, we have, like, whatever I have discussed till now, it's on the similar line, what is required to be performed under SRE 2400 plus audit. There is no difference. Only the difference is auditor performing a review of entering financial information. Earlier, we were talking about practitioner performing a review of historical financial information. Now, the word practitioner becomes auditor. Historical financial information becomes entering financial information. That's it. Similar way, if you see reporting the nature, extent, and result of the review of entering financial information. Over here, again, similar requirement that we have seen in the SRE 2400, that there should be an appropriate title, addressee, identification, okay, of the entering financial information reviewed. Identify if entering financial information comprises of set of general purpose financial statement, then a statement that management is responsible for presentation and preparation of that. A statement that management is responsible for preparation and presentation of entering financial information. Okay. If it is not a general purpose financial statement, auditor is responsible for expressing a conclusion. Okay. Statement that review is in accordance with SRE 2400. The statement that review is substantially less in scope than audit. Okay. If entering financial information comprises a set of general purpose financial statement, then a conclusion that whether anything has came to auditor's attention that cause auditor to believe that the entering financial information does not give a true and fair view. If in other circumstances that compliance framework wordings are there, date of report, place of signature, auditor's signature, okay, membership number assigned by institute, firm's registration number, okay, wherever applicable, and UDIN. Similar that we have in case of SRE. There is no change in that. Content of written report. Only the reference will change. That is entering financial information, SRE 2410, and auditor. Same limitation scope, limitation on scope of on scope is there if okay. It is same on the line that we have in audit. See, whenever I talk about limitation on scope, we need to just one thing understand that now we are not talking only about the practitioner, we are talking about the auditor. So limitation on scope imposed by management, okay, on a review engagement is not only, will not only impact the review engagement, but will also impact, okay, auditor's responsibility. So accordingly, the way we used to deal, okay, the auditors limitation on scope imposed by management in a case of audit, we need to deal in a similar way in case of a review. Because now auditor is there, he needs to consider the legal and regulatory responsibility. Okay. Whether there is a requirement to issue a report. So remember, there is a SEBI circular that there are certain scenarios where auditor has to mandatorily issue a review report. He cannot withdraw from engagement. So in that case, he needs to consider what is the regulatory and legal requirement. What is the implication when a management imposes a limitation on the scope of review? Okay. He needs to communicate in writing with the appropriate level of management and those charged with governance, the reason why the review cannot be completed. Okay. Then what is the scenario, why there is a limitation, everything he needs to communicate with the those charges governance and management. Okay, if he is not able to withdraw, then he needs to bring the matter of the limitation in his report. Okay, the auditor needs to communicate the matter in his report also. If there are other circumstances, okay, other than the limitation scope, limitation imposed by the management, and auditor is not able to complete the review, in that case, auditor needs to specify the circumstances of the limitation. Okay, whether that is material and pervasive or not, whether that is a material but not pervasive, and accordingly he needs to issue a qualified opinion or disclaimer of opinion. So limitation will have an impact on conclusion, similar that we have discussed till now on the similar lines. Then we have going concern and significant uncertainties. Again, the way we have requirement under SRE 2400, we have requirement under SA. Similar lines, on the similar lines, we have a requirement of going concern under SRE 2410. Other considerations. Okay. So, where any document containing other financial information that has been reviewed, auditor has to read the other information that has been there, which is there, like presented with the interim financial information. Okay. Now, there could be a scenario, there could be other information which is presented along with the interim financial information, which does not form part of the interim financial information. In that case, auditor needs to seek appropriate advice and appropriate legal considerations to that particular matter. Okay, documentation. On the similar lines, then there is a documentation requirement that we have. That's it. That is your SA 2410. SRE 2410. Similar, that whatever we have discussed in SRE 2400, just replace it with the wordings of auditor and interim financial information. That's it. There is nothing different over here. Any doubts with respect to SRE 2410? Now the question is, where is one doubt? Reporting responsibilities. To whom auditor is required to, report. Okay. To whom auditor is required to report, basically. Now, auditor is required to report to the management. Okay. Because here the auditor is appointed by the management or shareholders, basically. So addressee will be the shareholders. So I'll just show you one thing. If you see this word, to the board of directors of the company. So here the reporting is done to the board of directors of the company, to the management, who has hired shareholder. So to whom the auditor is required to report. Okay. Upon, based on his review engagement. Can auditor report to outside stakeholders? Now, this depends upon the type of engagement. Usually, when a practitioner is appointed to perform a review of a financial information, okay, let's say for some other purpose, in that case, it will be under SRE 2400 because he is the practitioner. But when a law or regulation imposes a responsibility upon auditor, then it will come to SRE 2410. So usually If it is a practitioner performing review engagement based on some other requirements, reporting to some some other stakeholders, that will be SRE 2400, and it may address to some other stakeholders. But auditor appointed under law or regulation, where he is required to report to the board of directors, he cannot address to some other law or some other stakeholders. Any doubt, guys, till now? Any doubt? With respect to SRE 2400, 2410, whatever we have discussed till now. Any doubts? No? Okay. So if no doubts, what I need you guys to do, number one, I want you guys to read SRE 2400 in 2410 in detail. Before next lecture, I want you guys to read SRE 2410 in detail. Okay. Complete the reading of chapter 10. Come up with your doubts with respect to SRE 2410. Okay. And in the next lecture, what we are going to do, we are going to start new chapter, that is chapter 11, with respect to prospective financial information and other assurance services. Okay. That will be SAE. Now, I request you guys to read SAE in detail, chapter 11 in detail. Okay. And accordingly, okay, we will start discussion on SAE. Now, see, when I will be discussing SAE, there is one thing I just want to highlight. Okay. See, now, when I refer to, uh, chapter 11, again, these are the assurance engagements. Okay, other assurance engagements, basically. So, the concept that we have seen in the audit or in other assurance engagement, it will be same. We are not going to discuss something new out of the box. No. We will be discussing how, okay, the concepts of audit will be applied in specific scenarios. How the concept of audit will be applied in specific scenarios. That's it. On a summary basis. Okay, we will understand the requirement of SAE. Okay, specific SAE, general specific SAE. Okay, we have already discussed some of the topic. Let's say, for example, when you discuss SA 402, okay, consideration of a service organization. Now, on the other end side, we will talk about assurance report on controls at the service organization in SAE 3402. So, being an auditor, we obtain type 1, type 2 report. Being an assurance engagement, we will now discuss how to issue type 1, type 2. So, whatever we have discussed till now, just we will apply those concepts similarly in assurance engagement. That's it. Now, assurance engagement with respect to examination of prospective financial information, it could be assurance reports on the controls of service organization. It could be assurance engagement to report on the compilation of pro forma financial information included in the prospectus. All three specific scenarios that we will be discussing. So I request you guys, before next lecture, please read chapter 11 in detail, so that when we will be discussing, you should have some reading done so that you can get what we are discussing. Charu, I have already explained that how we need to decide applicable financial reporting framework in my last lecture. So I would request once visit that particular lecture, okay, where we have discussed in detail. I think I have spent half an hour with respect to how to determine which is the applicable financial reporting framework, how to determine which financial reporting framework to be adopted, what should be the appropriate financial reporting framework. Okay, once you go there, and if you have still doubt, I will definitely, resolve that. I will definitely take up, because this will require, 10-15 minutes more. And considering the time now, it will be difficult to take it now. So I'll request you to go to that particular lecture. Okay. I think it was last lecture or last to last lecture. I'll request you go to that. And when we also discussed the same matter when we were discussing chapter 9. Okay. If remember when we are discussing chapter 9, audit related services. So at that time also we discussed this particular part. Financial reporting framework, something with respect to that, and majorly we discussed with the respect to chapter 8 when we were discussing, special purpose framework. So I request you go to those lectures, and once if you still have a doubt, I'll definitely resolve it. Okay. If no further question, guys, no further doubts, then thank you for your time. Thank you for participating in today's lecture. I'll see you in the next lecture. Thank you.